Let's start with Meta. That's kind of the equation, right? Okay, capital expenditures will be higher next year than they were this year. Then what? Give us more. Give us some longer-term outlook. There just wasn't a formal guidance. Is that what spooked the market?
Yeah, Meta was just in a period of being really comfortable. Zuck had been very comfortable. The company had executed. They had invested, and they were harvesting those investments. And now they're going back into invest mode. So I think at the beginning of the year, advertisers were saying that Meta was more sheltered because they didn't know what Google was going to do with AI, and we didn't know what was going to happen to TikTok. And then halfway through the year, everyone realized, hey, Google's got their act together in AI, and we know that TikTok now has more of a foundation. So I think, as I call it, there's less of a tailwind for Meta. It's not a headwind, but it's less of a tailwind than they had at the beginning of the year when you talk to advertisers. And I think what Zuck said last night on the call was the investments in AI are paying off, and they just need more of them because everything they built, they felt like they had overbuilt and they sold out of what they built.
Yeah.
So they have to build more. And so, yeah, it doesn't have anything to do with the fundamental position. It's, are we going to see margin compression, and then when does that return come back? But we already know that they have a return. We saw with Microsoft, they've given us margin expansion, even in the face of AI. So this whole concept that AI doesn't pay off is silly.
Yeah,
We've already seen
but the stock move is so big that we question, yes, we see Zuck on the call saying, look, I'm worried about underinvesting. We hear once again from Susan Lee that they're going to make notable investments. Everyone knew CapEx is going to go up and to the right. Why is there such an air pocket on this stage, you think?
Well, I think the outperformance of Google, I think you have money chasing. We're in a momentum market. I mean, look at yesterday before any earnings. Everything in applications went down, anything in AI went straight up, in infrastructure. So if you have CapEx going this high, the pushback is, why do I invest in internet and software right now? I should be invested in energy, in land, in all the enabling infrastructure. I mean, infrastructure goes up every day. Look at all the energy names. They're all ripping. And so I think there's a common pattern with tech investors right now. They're just, broader investors are moving their investments to other categories, and then they're chasing momentum. It's just, the market's so narrow, and you're seeing this. So there was nothing that was fundamentally offline. They're making the investment. They've done this before. How many times have we seen Meta do this? And then in return, the stock goes higher. They're going to do $30 of earnings power. Put a 30 multiple on it, you're $900 on the stock. It's a buy on the pullback.
Brent, the name with momentum is Alphabet and Google, right? They gave us two data points. Capital expenditures, $91 billion to $93 billion. But revenue from products that are built on Google's generative AI models grew more than 200% from a year earlier. That second part, your reaction to it?
I mean, AI is working. And I think the fear that investors have had is what happens when I go from a world of search to AI. And I think Google is showing they can do the high wire act very well between search to AI. Everyone thought search would implode. In the last 2 quarters, they beat the search number. This quarter, they accelerated their search number. So what they're saying is that search can be anywhere. It can be inside AI. It could be in their own search engine. It could be at YouTube. It could be across different properties. And I think what Google is demonstrating, and we've said this kind of for a while, they have better AI underneath the hood than they're articulating, and it's now coming out. You can see it. We said, they kind of pull up to the AI race, in a Toyota Camry body, but they have the biggest engine, and they pop the hood, and everyone's like, whoa, this is incredible. And so I think everyone is realizing, when you look at Gemini, I mean, we ran bench tests. It's almost equivalent to ChatGPT. And then you look at the breadth of their offering. And again, remember, they own the world's internet data. So you need data, users, and capital for AI to work. And they have all of those, almost better than Meta, Microsoft, many of the others. They have more data on anything in the world than anyone. So I think they're proving that this engine's working. The body didn't look great. They're upgrading the body, but the engine is really, really good.
But what's so interesting is clearly Microsoft is still working. When you're looking at Azure growth of 39%, that was better than the market had anticipated. Sure, it might not be much of a growth uplift, but what was it? What was the fly in the ointment for Microsoft, where Amy Hood again is saying my issue is supply, not demand?
I don't understand the market because they just put up over 50% RPO or backlog growth and 110, 111% commercial bookings. Those numbers are insane, and that didn't even include OpenAI's $250 billion incremental dollars. So I think the market's got this wrong, honestly, that you got to look at the backlog. The backlog is the leading indicator of health. The reported Azure number does not matter. When you're putting those backlog numbers up, that tells you they're capacity constrained. You can't book that kind of revenue and not take it to Azure. And the differential is they just can't get the capacity up right now. But their customers want to spend, and their customers are spending, and they know that what Microsoft has. So I think this is a common pattern where you're seeing massive backlog growth, commitments to AI from their customers, but Microsoft can't literally physically provision it fast enough. And when we talk to Microsoft offline, like the Azure number would be way higher if we didn't have the capacity constraints. So this is not a demand issue. Yeah. This isn't a competitive issue. This is an issue that the industry is facing right now across the board, is they can't get enough of it to their customers. That number would have been way higher because you can't describe the math of the backlog being so high and Azure where it's at. So I think, again, we look at it, it's important. Wall Street cares. I think Wall Street should care more about backlog and bookings. This is, again, what all Oracle trades on. Yes. They don't care about revenue. Why does everyone just care about revenue now? So I think, again, I think the Street's got it wrong.